provide some insights to why the market is moving. Now, from a more technical perspective, let's take a look at this. We'll start on pound dollar because I happen to be here. But let's take a look at what's going on because we got some cool opportunities going on. On the daily, we have absolutely nothing of relevance. We're just doing the choppy chop dance as we would expect, as there is so much uncertainty in the market. We go down to the 4 hour, right? We got a few things happening here. What is, I guess, one thing you can see on the 4 hour? You can see this on a lower time frame as well, but anything stand out here on the 4 hour chart for you? All right, can anyone see something here? Anyone see a little head and shoulders action happening? Again, a little bit clearer as we go down, but a little left shoulder, little bounce, little head, little bounce, little right shoulder, and then this green candle right here. What does that do in relation to the head and shoulders? Again, you either have a neckline looking like that if you're a trendy liney person, or a neckline looking like this. Yeah, it breaks and violates the neckline, and what does that do to the pattern? It confirms it, right? So we have confirmation of the head and shoulders pattern right here. Now we go down to a lower time frame. Again, you can see the same thing on the head and shoulders, or see the same thing on a lower time frame right here. Just got to adjust the head over a little bit like that. Same head and shoulders pattern, classic reversal pattern, comes at a previous level of structure. All good, baby. Excuse me. We also spoke about this being something called the Cody Special, though I don't know if it is the Cody Special. Yeah, it is the Cody Special. So something called the Cody Special. And to catch you up, Cody is a trader here at Tier 1. Long-term trader, good friend of mine. He is managing money. No, he's working for a prop firm and managing kids. That's what he's doing. I guess he's managing money by managing kids because it takes a lot of money to have kids. And one of the technique that he uses with the head and shoulders, because we know that typically we'll say there's a few ways to enter the head and shoulders, right? Or any breakout, before, during, and after, right? The after is what we're doing right now, how we have our violation, and then we wait for the pullback, right? So after the head and shoulders. During would be if you're a breakout trader. So as we violate the neckline, right? Like you buy stop above here, and then boom, you get involved, or even after the breakout candle. And then the before would be the anticipation of the breakout. Now, with the head and shoulders needing the neckline to be violated to validate the head and shoulders, well, it seems kind of weird, right? Why would you get involved in a pattern before the pattern has been validated? Well, with the Cody Special, what he uses is kind of the basic rules of technical analysis, right? Where he says this: looking at the right shoulder, the left shoulder, if the right shoulder violates the left shoulder, meaning you have a higher high, higher close. Now, what does a higher high, higher close mean in general terms? Just regular price action rules 101, the first thing we teach you. What would we predict? Maybe that's the better question. If we identify a higher high, higher close, we would predict a bullish move, right? So if I get a higher high, higher close here on the right neck, that allows me to make the prediction that price is likely to go higher. Well, what do we have right here? This is our first pullback, right? So this would be no different than trading the first pullback in any type of trend continuation trade or pullback type of trade. So his rules are, if we get a higher high, higher close on the right neck, then I can look for an aggressive buy at the right shoulder in anticipation of the head and shoulders. And we did just that. So a cool example right here. Now Mew says, is that a valid 2618 on the 4 hour? I don't know. Let's see. We have a 2618 here on the hourly. It's probably the same thing. I think it's a little bit more clear on the hourly. But yeah, you can look at it on both. So if I just erase the head and shoulders for a minute, and we look at this from a different perspective, right? Again, actually, no. Not a valid 2618 on the 4 hour. Now, who can tell me why? So 2618, we know that we start with our double bottom right here. Then what's the next thing we need? We need a break or a violation of the V. right? We need a violation of the V, the peak, right? On the 4 hour, do we have that violation? Yay or nay? I was gonna make a horse sound, but I decided against it, and I think that's a good decision. Do we have a violation here? Come on, I know it's Tuesday. That feels like a Monday holiday weekend. No, we don't. We do not break and close above the V, so no violation. Nope. So therefore, we can't have the 2618. However, on the hourly, and we already spoke about this because of the Cody Special, we do the violation, the higher high, higher close, right there. Then, right, if we bring in our Fibonacci retracement from our second bottom here to the top right there, you can see that we indeed do two things. One, we come back down to the 618. So if you are an aggressive 2618 trader that simply puts a limit order on the 618 and buys as soon as it gets there, boom, you're filled. Or if you're looking for the 618 to be hit as your trigger, and then you're looking for something like a 3-bar reversal, I think you mentioned that as well, so we'll use that as an example. Here is your nice 3-bar reversal entry. Here is your buy right there. And you've already made delicious profit, or probably made delicious profit, depending on where you're shooting for. So good example right there. Now, the question is, before I get into some more of these the questions that you said, the question is, all right, is this opportunity over, right? Because obviously we rallied up. We put in a new violation. You know, I like to call these fresh breaks, right? If we were to get a 3-bar reversal here, is this another valid trading opportunity, or has the move been made? The level that stands out for me, if I were looking to buy this as a head and shoulders, again, this is the same thing as the head and shoulders pullback entry. There's two zones that stand out to me, right? And let me know if this makes anything clearer for you. Market ebbs and flows and does this, right? You guys see this little bounce right here? Boom. This is the first zone that stands out for me. This previous spike here, this previous spike up here, that is the zone that I would expect price to go to. Now, that's a big zone. It's not a super big zone, but it's a big zone. It is about, what, about 20, 30 pips. What can I do to maybe get more specific? Maybe dial down that zone into a smaller zone? Volume, yeah, I can use my anchored volume profile. We can drag it from this swing high to this swing low right here. So looking at this whole zone of price movement. And we can see, is there any volume spike in there? Well, there's a little bit. What else do you got kind of see? Ollie says elephant candle in front of it. Yeah, not going to do the elephant sound either, but yep. We have our elephant candle. This big red boy right here. I'll do the elephant thing there. Boom. Mu says Fib extension. Yeah, we can do a Fibonacci extension. I'm sorry for marking up my charts too much, but we're doing analysis. I've got my crayon box out and we're just drawing all over the place. Fibonacci extension, swing low to swing high right here. And back down. Do we have anything in there? Oh, look at that. Okay. Anything else? You guys are missing one thing. One thing. Could be an equal measured move as well. That's not the one thing I was looking for, but that's a good thing we can add to it. Right there. Mo, yeah, Katie. Katie beat you to it, Mo. Psychological number, right? Look what we have right at this volume spike, right near this 127. We've got a number of 133.00, right? Look for the zeros. Right on the spike. Look for the zeros. Psychological number. So, if I had to choose an area, right? I do like the volume spike. I do like the elephant zones. We're dialing this down. I've got me a specific number now, 133.00. Get a few pips ahead of that, maybe 120, or what it would be, 132.97, something like that. and boom, that's a decent level to look for. So now you got your target projection. I'm going to delete some of this stuff and keep the line that matters, right? You got your target projection right there. We've identified what the market has done. We've made a prediction of what direction we can go in. We've made a prediction of where we can go in if we get a chance to go in that direction. Now the question is, decide, right? IPDE. What do I need to get involved, right? Many of you guys have said 3-bar reversal already. And then where do stops need to go? So this is going to be an interesting one for me because, again, although my prediction is up here, I like this area. My rules, because I'm not a trend trader, is I have to take targets at a retest of the highs, which is right there, right? I know my rules for stop loss, right? 1 to 2 ATR. So we'll just go 1 right here. Our ATR is 20. Our low of our candle is 132.36, making it easy, 16. So I'll draw up my stop loss. I told you I would do this as well. So let me, this would be a sell limit order, right? And that's for target, right? If we're buying, we want to do the opposite. 132.16s. This would be, what type of order would this be, guys? Oh, darn it. Sell, what type of sell? For a stop loss? Nope, not a limit. Nope, sell stop, sell stop. Sell stop. Oh, sorry. And we're using that type of order for our stop loss. Here we go. And then I know I personally require a minimum of a 1-to-1 risk reward. So I'm going to take my beautiful Fibonacci retracement tool. I'm going to drag it from my potential target area to my potential stop area. And then I know that if I want to have a 1-to-1 risk reward, I need to get involved at least right here at this blue, soon to be pink, red, pink line that I'll thicken up some so you can actually see it. Because any entry above that level would not give me a 1-to-1 risk reward. Now, the unfortunate situation of this is that it's going to be very hard. I need pretty much a higher high, higher close that comes about 1 pip above that green candle in order to get a 1-to-1. So there is a chance. So you're telling me there's a chance. But it's probably rare that I get involved in this trade. Now, if you're someone that is looking for this higher level, right? You're a trend trader that is allowed to play for the extension. This opens up a lot more room, right? Now, if I take my Fibonacci retracement from my target, potential target, to my stop, potential stop, and I look for that 1-to-1 area, as long as I get a higher high, higher close that is below this line, then you can enter the trade. So decent opportunity here, looking for a pullback trade here on the pound dollar. There are some questions that you guys had, but let me get this into our pro trade log before I forget, and I will go back to them. We are looking at, all right. Muse says, so it's going to be a market order to enter the trade. If you're buying on a, if you're buying after the candle completion at market, then that would be a market order. Yes. So limit orders are going to be used. Limit orders and stop orders are going to be used in advance. So I set a sell limit order here because I want to set an order in advance of price getting there. I put a sell stop here because I want to set an order in advance of price getting there, although I hope price never gets there. Those would be before predetermined kind of levels. The market order would be like, I want to get involved right now. So like if you wanted to, we talk about slippage sometimes. So let's say price action does go up here and it flirts around and it's like spiking your order, but it doesn't get filled because of like the spread and all that fun stuff. What I'll often do is this. I have a fool me once type of rule, right? If I'm actively watching a trade live, I'll give it one time to spike through, meaning I'll let it hit my level, and if it doesn't get filled, because it happens, then it doesn't get filled. But if it does it again, then I just exit at market. I'll close the trade at market. So you can use a market order to exit as well, and then you don't play those dumb games. It's not worth 1 or 2 pips to kind of play those dumb games. But yeah, it will be an at market order for the trade. All right, let's go back to some of these questions that I